Well, joining us now from our studios in Nairobi to give us an update on the Kenyan markets, it's Fred Mweni, Managing Director of Tsavo Securities. Fred, thank you so much for joining us. We're seeing a downturn in the market today, but we're seeing the likes of housing finance doing really well. What are some of the reasons behind these?
I think the market opened on a slow note. I think less than 100 million did trade. We are going to see this kind of activities being slow for the next 1 week until the end of the month. We understand that this is the reporting season for most of the fund managers, going back to trustees, getting new orders. And also this is also the reporting season for most of the insurance companies in their portfolio investments. So not much activity is going to be seen in this particular week until maybe next week. But I think when the market gets back, we are going to see a lot of interest coming from the industrial area, the industrial stocks as well as the banking stocks. And I think going forward, most of the volumes are going to be concentrated toward those two sectors.
Yeah, and you were telling me earlier that NIC came out with the results and they did poorly. Is that an outlook for most of the results that are coming out in the next 6 months?
Yeah, exactly. Very interestingly, there's a new law here that requires that all the CMA licenses, the investment banks, the stockbrokers should publish their quarterly results, publicly. And I think they're the first guys to come and show us how their book looks like as an investment bank. And it was pretty bad. And I think that's the one that has sent a lot of shivers to the investors. And people are trying to dump off the stock to cut their losses. So I think going forward in that particular segment, we're not going to see a lot of enthusiastic results. And I think most of the brokerage companies, probably investment banks, also did not do better because the market volumes were pretty low this season.
Well, what are investor sentiments like at the moment on the Kenyan bourse, considering a lot of the results are coming out in the next 6 months?
I think there's a lot of wait and see, particularly from the institutional side. From the retail, there's not been a lot of activity there. But I think this is just for a short time, because if you look at the jump in the second quarter, there was not much activity in April, but I think came May and June, there was so much activity. So I'm expecting the repeat of the same thing to happen. And I think most of the concentration going forward is going to come from the institutional investors, the local institutional investors, because last time we were beaten by the foreign investors who came a little bit earlier before the other ones came in. So I think the sentiment is a bit positive, though not very much aggressive. But I think going forward, there's going to be a lot of interest coming through from that side.
All right, we know that the MPC meeting took place last week, Thursday. What's the impact of the cash ratio reserves, considering it went from 5% to 5.45%? How will this impact banks and lending rates going forward?
Very interesting stuff there. In October last year, actually, the Monetary Policy Committee met and cut the CRR from 6% to 5%. They released almost 10 billion shillings, but there was not much impact that came through. So last week when they cut the same CRR by 50 basis points, only about 5 billion was released. But today something very interesting happened. I think the central bank was in the market. They injected just about 11 billion in reverse repo just to bring in some liquidity. I don't see there's going to be any impact on this CRR reduction, given that three things are right now prevailing. The liquidity is a bit tight. Most of the banks are very short. If you look at the interest rates in the money market, have come down to about 2% on the overnight. So there's not much activity there going forward. We don't see that cut. The interest rate cut is going to impact the banks to force them to start lending to the private sector. Maybe the MPC may be forced in the next 1 or 2 months to come and cut it further from 4.5 maybe to 3%. Then that can release a little of some liquidity that can push the banks to start looking for a home for the liquidity. But right now, I don't see any impact coming through.
Yeah. Well, inflation rates are of concern right now. What do you think that the CBN should do to curb inflation?
Now, you see, the inflation in Kenya is a bit complicated. First of all, it arises from the supply side. There's not much supply from the foodstuffs, not much supply on the energy sector, a lot of constraint on the transport. So these are the ones that have really helped the inflation stay at above 10%, at 16%, 17%. And I think that one is going to take some time before you can control it. And it's not caused by the demand push, whereby if you say there was so much money in the market, then that is the one that is pushing the market. At least it could be understood that you can cut and reduce credit in the market, then the inflation comes down. I think in our case, because it's a cost-based inflation whereby there's no supply, there's little the government can do or the central bank can do other than being able to put supply for foodstuffs, particularly maize, probably the staple food here around here, the grains on the table, and probably being able to buy in large quantities and avail that onto the market. That's the only way that's going to curb the inflation. Otherwise, I'm seeing it, the lack of rain that has existed for the last 3 months is going to make the inflation go back to about 20%
All right.
in the next quarter.
And just before we go, Fred, what are your key stock picks for this week?
I think the key things to look for this particular week is going to be Equity Bank. Obviously, lots of things happening there, expansion, product launches coming through. Then KCB too, because KCB went to Southern Sudan. We are yet to be told how the quota was in that particular side, and as well as EABL. EABL are supposed to be announcing their full year results, and I think it's going to be fantastic given that the competition has been a bit weak, but also the consumption has been hit by the recession. So I think those are going to be the stocks to watch this week going forward.